Hello again from Core Wealth and welcome to 2021. We hope that it's going to be a great year for you and we're looking forward to it. We're going to take this first wrap up of 2021 to look back at 2020. And there was a lot that happened in that year. Some of it we've probably already forgotten about, but just have a look at what happened and what it meant for markets and portfolios. And then we'll close off with having a look for the rest of 2021, what we expect to see. So Corona was obviously the biggest story of 2020. Over 85 million people have been infected by the disease at the time of writing, and over 1.8 million people have lost their lives. The response by governments to try and control and slow the spread of the disease has meant that it had economic impacts as well. And we saw in the second quarter of 2020 severe slowdowns in economies globally. The US down by over 30%, South Africa down by about 50% for the second quarter of 2020. However, we've seen the economies bounce back up again, and although things were very negative during the second quarter, the bounce back has been almost as severe, and we've seen very much what they would call a V-shaped recovery, where there was a deep drop-off in Q2 and a sharp rebound. South Africa is expected to shrink by around 7% for the year as a whole, and the US by probably somewhere around 5%. Other things that happened last year that were big news items were the US elections. We've seen Joe Biden win that, Donald Trump moving out of the White House in a few weeks' time. We've also seen, subsequent to the end of November, we've seen the Democrats gain control of the Senate, which will mean further stimulus in the US. And then we've also seen conclusion on the whole Brexit situation in the UK. All things that bode well for the future, we think, in creating a little bit less uncertainty. So the next question is, how did markets react to all of this uncertainty? In February and March, we saw global equity markets plummeting and in some cases losing almost half of their value. This was clearly the end. If we have a look at the US stock market, had been in a bull run or had been going up for the longest period of time if you look back through its history. And this pullback in markets in the US over 30% was the end of one of the longest bull markets that we've ever seen in the US. Around the world, we also saw stock markets coming off very severely. In South Africa, over 30% in March. In places like Italy and Brazil, over 40% fall in their stock markets. Other markets that were affected was the oil price. We saw the oil price come down severely, and at one point, more of a technical issue, but actually the oil price went negative in the US crude oil market. So all this uncertainty created a lot of volatility. We saw markets fall precipitously in March, but then we've seen, subsequent to that, we've seen the markets pick up for the year. And when I talk through the figures in a little while, you'll see that we actually ended the year positive from a market performance point of view. So if we have a look at how markets performed in 2020, despite all this turmoil, actually have had a reasonably good year. Just briefly looking at December, developed markets were down slightly, just over 1% in December. Emerging markets were up almost 2% in December. The South African equity market was up nicely, up over 4%, and listed property in South Africa, very much shunned earlier in the year, was up almost 14% for the year. Bond markets were also stronger in December, up over 2%. In South Africa. If we look for the year as a whole, the best place to have been was in emerging market equities. Second best would have been developed market equities, both of those up over 20%, 21.7% for developed markets and 24% for emerging markets. The all-share index in South Africa actually ended up positive for the year and was up 7% for the year as a whole. If we just have a look at 2020 and think how tumultuous it was from a news perspective, from a volatility of markets and economies, and how the South African economy, for example, was down over 50% in the second quarter. But despite this, you actually achieved a positive return on the average equity if you invested in the JSE. Just further emphasizing the point to not become short-term focused with long-term portfolios. If we look at our underlying funds, all of them have generated positive returns in 2020, despite it being such a horrendous year from all other perspectives. So looking ahead, we still see significant opportunity for good returns from equities, both in South Africa and globally. One of the areas where equities have underperformed slightly has been more valuation-driven equities. So good companies at lower prices rather than good companies that are at expensive prices, and the tech stocks, things like Facebook, Alphabet, Amazon, have fallen into that category and have done very well over the last little while. But as we see the vaccines coming through, and that is happening very quickly at the moment, and the effect of the vaccines, which we expect to see start happening towards the end of the first quarter and second quarter of 2021, we expect to see economies normalizing, and that will be good for your good companies that are at cheaper prices. We expect to see more demand for those, and their prices will go up. South Africa as a whole, the JSE, will be a beneficiary of that, and we saw some of this starting to happen in November and December. If we have a look at the bond market, emerging market countries, the bonds that they issue are trading at very high yields, very attractive yields, as opposed to developed markets where their yields are actually negative. And so we're starting to see some demand, and we expect to see more demand for emerging market bonds during 2021 as the developed market investors see the attractive returns they can get from that space. Listed property, both locally and internationally, there are some good opportunities, not so much in the retail space, but in things like warehousing, data centers. There are some good opportunities to be had there, and we are positive on the outlook of that sector as well. So 2020 ended up as a positive year despite all the tumultuous news and the challenges from Corona. If we look at 2021, we see far more tailwinds that will support investment returns, and if we look over the next 3 to 5 years, we actually expect to see better returns over that period than we saw over the preceding 5-year period. This will be good for our portfolios, and the key thing is to stick to long-term strategies. Most of our staff are back in office now. If you have any queries or any things you'd like to discuss, please give us a call. It'll be good to chat with you and catch up. All the best for 2021, and we look forward to seeing you sometime during the year.